Hello and welcome to Season 2 of WION Business Masters, a show where we sit down with the leaders who are quietly reshaping India's business landscape with strategy, grit, and a deep understanding of what it takes to win in one of the world's most dynamic markets. In a country where trust in financial institutions has been tested time and again, building that belief isn't easy. Our guest today has spent more than 2 decades doing exactly that, building trust in an industry where skepticism is the default and loyalty has to be earned one investor at a time. Today we have with us Mr. Shrinivas Khanolkar. He's the head of digital marketing and corporate communications at Mirae Asset Investment Managers Private Limited, one of India's fastest growing fund houses. Mr. Khanolkar, welcome to WION Business Masters. It's a pleasure to have you with us today.
Diksha, thank you. Thank you for having me today.
So I'm curious to know what drew you to this sector and what has made you stay for this long?
That's a very interesting question. What drew me to this sector? Honestly, I would say I'm an accidental marketer. Coming to mutual funds was also almost like a chance. It wasn't a first choice. I was working in the insurance industry before that. And probably I was not happy with the way my career was sort of structuring and going ahead. Then this opportunity came along to move into the mutual fund domain. Day one when I landed up on the job, I was hearing stuff like 10 paisa de do, 20 paisa de do, which is a mutual fund terminology. And I was wondering कि 10 पैसे में क्या होता है? It took me some time to understand that the importance of basis points and what impact it has on the P&L, on your own personal maths, and the entire financial compounding story sort of started unfolding is when I realized that, okay, probably you've come to a place where you can build your own finance first, and then probably later on, slowly you started understanding that how this entire, the whole mutual fund industry operates and moves ahead.
Right. And so having said that, what do you think is one of the biggest misconceptions that people still have to this date about mutual funds or investing?
I think from an investing point of view, the biggest misconception that the people have is about when we talk about that you will get about 10 to 12% annualized return. Everybody thinks that 12% is like, if it's a 10-year 12% return, then year 1 is 12, year 2 is 12, 3, 4, 5, 6, all are 12. But in reality, it can be, say, 24 minus 10, 9, 8, 7, 36. When you do a 10-year like CAGR, you will figure out that it's about 12%. I think that's one of the concepts. If people understand quickly that it's not a straight line, it will have its own volatility, it will undergo its own challenges and turfs. And at the end, you will emerge as a winner, but you need to give time. That's one of the myth. If it's broken on first day for any investor, it'll be probably doing wonders for them.
Right. And as you said, it's not linear. Perhaps the market is quite dynamic. And India has gone through this paradigm shift from a culture of saving. We're now seeing a culture of investing. What do you think is driving that attitude?
Two things. People have seen the benefits of being investing over a period of time. Plus, the markets have supported. So there is a new crop of investors who are coming in, the Gen Zs who have come in, and they have seen that, when you take out money from something which is fixed, if it's assured return, then there is no free lunch. There could be something which is happening behind the scenes you do not understand. Maybe you need to optimize your return by taking risk. And I think large part of the population today who's coming out and investing, inherent risk of survival is already taken care by the parents. They are not living in a society, they are not undergoing the challenges what probably the generation in the 80s, 90s, up to mid of 2000s went through, where you were trying to look at what is going to happen next. What's my 1-year view? What is going to be my salary? What I'm going to take back? So a lot of the investors who are already now into they're working or they have their own businesses, for them probably they are free of life risk burden, right? So there is no debt at their own personal level, or they have to create something for family to look at the first go, which was probably a different scenario maybe 15, 20 years back. And I think that once the mindset sort of opens up that, you can actually experiment with your money, is where you're seeing this whole new generation taking much more risk than what probably I did when I was at the same age.
Then, so would you say that this safety net of sorts that we've discussed about, is this driving the major difference between how the younger people are investing right now, let's say, as compared to the previous generation? Or is there some other factor which is driving this, paradigm shift as we were discussing?
I mean, we are all discussing, what Gen Zs are doing. Wait for Gen Alpha to come in.
Right.
They would be coming into the workforce in next 5-7 years. And you would actually realize that their risk-taking appetite will be very, very different. The kind of conversations they've had at within their households. I think, say about 20 years, 30 years back, people sort of who did well in their lives, early mover advantage they had, probably went to schools where they got a good network to build, or there was a good conversations in the household about money management, right? But now, more families are opening up to have these conversations. I think that is changing the way people are thinking about money. And that is possibly taking them to that step that, look, here is some money which I need from a daily running expenses. But the rest of the money, I can probably go longer. I can go to slightly riskier instruments. And that's one of the reasons why, if you look at the mutual fund industry, the highest number of SIPs are in small cap category, which was not the case maybe 10 years back. And that sort of tells you the big difference between what is the mindset of today's investors as compared to maybe 10 years, 20 years back.
Right. And I would assume that a major part in it is, of course, how the idea is being communicated and marketed to this new generation. And we'll have to, of course, tailor it for Gen Alpha going forward. But now looking back, people say that nostalgia is fresh capital. Was there a particular campaign which you feel has really nailed it, which had a great retention value or a great recall value? It could be finance related or non-finance related. Like we've had Cadbury and Nirva, which people still instantly go back to that time that whenever the jingle starts playing up. What is a campaign that you feel has resonated really well with you over the past years?
I would say look at the Amphis campaign, which is more about mutual fund Sahi Hai. I think it just opened up people's attention that here is some segment where people can do capital market investing without going directly to stocks, and that thereby you can diversify your risk element. And that sort of, took off. The first initial few ads were more about making awareness. But if you see the ads now, they are talking more about control of behavior. They're talking about how do you manage your own personal biases rather than looking at what the category of the products is. I think that's step two, because step one will always be about awareness. Step two would be going deeper. All you need to do is make the bullet more sharper to go deeper, because in personal finance, the only thing which is different is personal. Finance is common, right? I mean, it's all maths. It's maths bundled into various combinations to deliver returns for people. But the word personal, when it comes in, it becomes more emotional. It becomes more sort of resonating to person to talk about. For us, ourselves, we sort of brought up a campaign called Sapna in Progress, which stands for SIP. Basically, your systematic investment plan for yourself is nothing but you're trying to build some dream and you are working towards making it work. So the moment we sort of coined the term SIP as Sapna in Progress, we sort of saw people resonate with that, because it probably gave a meaning to them about what they feel about their own investing patterns. Because I fundamentally believe that we talk a lot about goal investing. Actually, goals give people exits. If you're just investing aimlessly without having a particular goal to fulfill, then probably you'll always be like, whether I am behind the curve, ahead the curve, or I'm happy with what I'm doing. But the moment you define a goal to it, I think it tells you when to sort of, fructify that goal, when to cash out and make that dream possible.
Absolutely. And Mr. Khanolkar, you operate at the intersection of finance, communication, technology, and According to you, what has been the biggest mindset shift that you personally had to go through when we shifted from a more traditional platform to, let's say, digital, and now with AI advancing
Yeah.
leaps and bounds, where do you think we're headed next?
So before I came into the, like I said, I am an accidental marketer. So I was on the frontline sales before that. Now, what happens generally in the sales function is that there is a product pitch. Probably you take 10 things out of it. You do your own bit of study and say that, okay, how am I going to go and talk in conversations and make it maybe 100, trying to convince the client, your channel partner, and the investor. But when you're on the other side of the spectrum, that 100 has to be narrowed down to 10 points into one image, right? I think then it all comes down to simplicity. How simply can you communicate your idea without using technology jargons, or you're using finance jargons? Can you simplify it? And the moment you can simplify it, I think it's the best communicated. Anything when you communicate in your personal language is the best communicated thing. So AI is actually going to help all of us. It's already
Right.
helping, but with the translations, it still has to catch up a bit. But it's helping us sort of do complex stuff pretty sooner. I wouldn't say the results yet are satisfying from a personal finance part, but if you have to write a script today for a content reel, I think it can do the job very, very quickly.
Well said, Mr. Khanolkar. And now, while strategy and systems are essential to building any strong organization, many of our younger viewers are equally curious about the person who's behind the decisions. Now, in this next segment, we want to understand how you approach judgment, uncertainty, and change in a world where markets and people are moving faster than ever. Now, sir, how would your team describe your leadership style, your decision-making, caliber, and do you think it would be an accurate assessment?
Well, if you ask your team, probably I have not asked them what they feel about my leadership style. Um, if you ask them, maybe you may get a right answer. If I ask them, then that's going to be a little bit biases may come in. Um, but I think from a leadership style, I feel that the team should be empowered. If they are supposed to take those decisions, make them accountable for them. If there is a bump in the road, then give them a pat on the back. And if they are sort of taking it ahead, they are innovating. I would probably look at whether they're getting new ideas to discuss rather than doing just this mundane stuff. So that is something which I encourage. Probably I'll be the first one in our WhatsApp group to be sharing the most creative reels which are coming out on social media, asking the team about, is there a way mutual funds can be presented in the same format? I think that just opens up more conversations, and probably I would say that I would like to open up more conversations with them.
Absolutely. And with so much automation, which is also entering finance now, where do you believe human judgment remains irreplaceable?
In many things, because what automation can do is help you bridge those gaps, which probably you were human dependent to sort of uh, if you had to pull out a report and start doing a marketing campaign on it, those insights which would come probably would come in maybe a week, 10 days, 15 days, sometimes a month, depending upon the complexity. Today, that job timeline is sort of crunched down. But what is that you want to achieve out of that is still a human brain,
Right.
who's telling the machine that, since this is my output which is required, please tell me what are the things which need to come in. Now, machine still hasn't gone there. Who knows, it can one day, but I would still feel that human intelligence is very much important, because HI is above AI right now.
And so, when we talk about financial literacy, particularly in India, can we acknowledge that the gap is still there? And is the gap more about knowledge? Is it behavior? Or do you think it's perhaps trust in institutions?
The gap is there, but it's bridging. And I think, see, the gap will always be there in most of the countries. It's not that India is the only country in that manner. Yes, we have been from a saving to investing culture. We have been a little behind the curve as compared to others. But when we look at the global numbers, one need to remember that a lot of the money is pension oriented, which becomes part of mutual funds globally. But in India, it's not that case. So if you had to account for all the financial investments which at household have happened, probably the number would be different and not as low penetration levels as it looks from mutual fund industry point of view. But most of that money is still backed by assurance. And the moment it's backed by assurance, it's not going to give you the optimal return that you're looking for.
Right.
And that's where the investors are now. I think the numbers have pretty much changed. Probably now we have almost 1 out of 4 women investing, which was not the case a decade back. So we are seeing changes happening. I think the moment it enters household conversations, the numbers can really sort of gallop from there.
Right, Mr. Khanolkar. And like, if we just zoom out for a moment here and look at how perhaps the investor behavior itself is evolving, how would you, based on your observation over the years, how would you rate them? Do you think it's moving up? Is it moving down? Or do you think it's just changing form? Now, the first one that I would like to discuss with you is, of course, risk appetite, as we discussed earlier. Do you think that people are becoming more comfortable with volatility, or perhaps they're just reacting to it faster?
That's an interesting question, because if you look at what has happened last year from a gold silver investing point of view, purely in silver, I would say it was more of reactiveness, but also proactiveness, because we see the young sort of moving into those zones very, very quickly as compared to investors who've been investing for like 20-30 years in the markets. So we are seeing the young actually being very light-footed in terms of moving in and out of opportunities which they feel
Right.
sort of suit them, or it's in the trend, and if they are able to see a breakout trend, they sort of capture. I always believe that as a child, if you look at it, the child has no fear of risk, right? His concept of risk does not exist. If he feels that is something to be taken, it will go and reach out for it. As age catches on, then the concept starts coming in at what is risk and what is not risk. And I think as they mature into seasoned investors, they would also understand that once you grow capital, protection is also important.
Right. And in the same breath, also trust in the institutions. Do you think, and especially in the traditional financial institutions, do you think it has deepened, has it fragmented, or perhaps it's being redistributed across platforms?
Definitely there's a redistribution, because see, you cannot invest without having a bank account, right? But how much money to keep in a bank and how much to take risk on that money which is available for you, I think that is changing, because people are now opting for more instruments where they feel they are in better control than simple products where they feel that they will get more assured returns. I think that definitely is getting redistributed.
Absolutely. And so while we talk about the business strategy and your vision, we also want to understand who you are as a person better. What guides your decision? How do you manage your energy? And of course, the buzzword is work-life balance. How do you approach this? Because a lot of new studies which are coming out show that work-life balance is inherently a flawed concept now, and people are trying to integrate their lives together in a way, trying to operate them parallelly. How do you go about it?
Well, that's always going to be the most debated question in the corporate life about work-life balance. I feel it's about the individual, how much you want to take and how much you want to sort of step back and say, this is probably now going to affect my health, so let me just step back and look at it. For me personally, I think having to be a father of 2 young kids keeps us quite active that way. Taking that hour to spend time with them every day just sort of refreshes your mood. The kind of conversation the kids are having now are very, very different to what probably I had with my father and
Absolutely.
mother. So they keep us on toes, and I feel Probably my elder one, the conversations I'm having about with him about money. In fact, he did ask me one day when he was not well, so we had to take him to the hospital for a day. And me and my wife are having a conversation about, listen, this bill looks to be a little more than what we thought. He just heard about it. It's like a sponge moving around the house, absorbing stuff. Maybe a night later, when I was putting him to sleep, he asked me that, is all money over? Because their understandings are very different, right? At the same point of time, he knows, and there is enough material now to be read in the right manner. He knows about how a banking system works. How does a bank make money? ATM card is not just a source for unlimited cash, but there is something which goes from the salary account there, and then that is withdrawn. So like I said, that conversations like this actually, as a person, gives me also a lot of food of thought, that what are we driving as messaging to our investors, because this probably should be happening in many households.
Right. And Mr. Khanolkar, what is something that people would be surprised to learn about you, and which has quietly also influenced your leadership and decision-making style?
Quietly, which is, I'm a big foodie. I must admit that. And I love going places and spending time at one place. I remember I was asked by my colleagues that when I planned my trip to Portugal, they asked me that, what are you doing 16 days only in Portugal? It is unheard of. But the same person who had asked me this question, late last year, when he did his trip, and I asked him, what did you do so many days in one place? He said, no, we had that conversation, I remembered. And now I think I realize that, as you grow up, then probably just enjoying with what you've created gives you much more joy than just running around everywhere. So I feel that, when there's possibly there's a movie which is a big favorite of mine. It's called Vantage Point. I think it's a cult movie people should watch, because it's the same 15 minutes shot with 5 different perspectives. It's the same thing happening, but it's shot from, probably people may just listen about it and watch the movie, but it's the same 15 minutes shot with 5 different perspectives. So it just tells you that, when you want to take a decision or run some campaign or probably plan a strategy, can you think about you being in those situations and feel that, how it will impact you? I think that eases out a lot more.
Absolutely. That's very interesting, Mr. Khanolkar. And before we wrap up this section, how about we do a quick rapid fire round?
Okay.
And okay, let me start with this one. What do you trust more? Is it data or is it people?
People who come with good data.
Okay. A habit that you're strict about no matter how busy the day gets?
1 hour with the kids.
And what's harder to build according to you? Is it a product or is it a reputation?
It's definitely reputation, but it will be built through good products.
And what is something that you would never compromise on?
Ethics and trust. I think that is something which, because our business is about managing money. Right. So if that goes away, then I don't think anybody will believe in it.
And lastly, what do you think is wiser? Do you believe in making mistakes firsthand and learning from them? Or do you think learning from others' mistakes is perhaps the wiser choice before the cost becomes personal?
That will always be great, to learn from other people about what mistakes happen. But mistakes are going to happen. I don't think if you've built a career over a long period of time, that there have been no mistakes. But what's most important is after that, what you've learned from it and whether you bring that learning in the long term.
And finally, I want to turn the focus outwards to young professionals and aspiring leaders who are watching and learning right now. Drawing from your journey, your choices and your experiences, what are the lessons that you think that they should carry forward as they build their own careers?
Make mistakes. Do start investing early. That's for sure. You will hit some speed bumps on the road.
Right.
But I think you need to take that in strike and move ahead, because I also, when I was young, I made some investing mistakes, but you realize over the period of time that this is what you need to fix and move ahead. If you feel like you're not making mistakes, then I think you're stuck.
Right. And if young viewers remember just one principle from your journey when they make difficult decisions, what do you think that would be?
Sun will rise tomorrow.
All right, sir. That was a very wonderful conversation. And with that, we'll have to wrap up this conversation. Thank you for your time and for sharing your insights with such clarity. That was Mr. Shrinivas Khanolkar, Head of Digital Marketing and Corporate Communications at Mirae Asset Investment Managers Private Limited.
Thank you.
And to our viewers, thank you so much for joining us. We'll be bringing you conversations that help make sense of business, leadership, and the choices shaping our future. You've been watching Business Masters Season 2 on WION with me, Diksha Bisla. See you next time.